Hello everyone, welcome to my YouTube channel. Today I'll be showing you how my entry model is on the 1 minute as I promised to do earlier in the previous video. So let's get right into it. So as you all know, I do top-down analysis on every chart. Most especially I start from the 4 hour down to the 15 minutes down to the 1 minute to get my entry. So that's how I trade. So as you can see on this line chart here that I made, the black line is the higher time frame, which is the 4 hour. The blue line is the medium time frame, which is the 15 minutes, and the yellow line is the um, lower time frame, which is the 1 minute. So this is a bearish market scenario, right? Market just broke structure. This video will be very short, so please just stay tuned. This is a bearish market. Market just broke structure, so we are waiting for it to retrace down towards the premium zone on the 4 hour. So once market gets to the premium zone on the 4 hour, I'll go down to the 15 minutes immediately and wait for what? A change of character, as most people call it. I'll wait for a change of character. But for me to confirm a change of character right on the 15 minutes, that I'll potentially trade from. Now, observe, most times markets might do something like this on the 15 minute and most people take it for a change of character. Maybe it goes into the zone, then there was a little retracement and it break the structure and now it broke the structure. They'll say, okay, this is a change of character. I want to so they'll be saying, okay, since this has broken structure, I'll be selling from here. Most times these things are what are liquidity. Markets might just do something like this. It comes, takes you out, then break the actual character, then mitigate this one before diving down. So how do you know which one is a real change of character on the 15 minutes? Now, this is what I do. On the 15 minutes, for me to confirm a change of character, I would like to see a retracement of at least 15 pips on the 15 minutes. If this retracement right here is not up to 15 minutes, then I'm not trading it. I'll be like, okay, this is liquidity. I would want to see a 15 minute worth retracement, then a break of that low of that retracement, then I'll trade it. But if it's not up to 15 pips, if it's 14.99, I'm not trading it. It's for me, it's still what uh for me, it's still the liquidity grab. Liquidity want to be taken, so I'll wait. But once go to the 15 minute and I see a 15 pip retracement and a break of that 15 pip retracement to the upside, then break downward, I'll be like, okay, yeah, this is a chalk. So now I'll draw out my zone right here. Wait on the 1 minute to what to trade from. So that's what happened right here. Wait for the 1 minute. Now price retrace back to the zone. Now on the 1 minute, I would love to see even an inside bar retracement to trade on the 1 minute. Now, this is what is happening, right? Market is bearish, the 4 hour is bearish. Now, the 15 minute is now bearish. Now, on the 1 minute now, you don't need, because they say the market is fractal. What happened on the lower time frame is what will happen on the higher time frame. Now, I don't need to wait for long confirmation, wait for long retracements for it to break before I trade. No. Now, I know everything is aligned. So, the 1 minute is most likely to follow what the higher time frame. So that's what I'll be expecting to happen. So if I see even an inside bar retracement and price breaks that inside bar low, I'll look for the zone that caused the break of the inside bar low and I'll trade from it. It's as easy as that. And I love to trade flip zone, most especially on GBP USD and Euro USD, because flip zone indicates what the strength of what the side you are trading from. Because let's take for instance, right? Let's take for instance right here. Sorry about that. Let's take for instance right here. What's happening? Sorry. Let's take for instance on this example I gave, right? Look at what happened. Price came, now it came back down. Now here there is what? A demand zone right here on the 1 minute. But price reacted off it. After price reacting off it, it went up or failed to do its job. Now you know the job of every what demand zone is to break every supply zone and make a new high. But this demand zone failed to do its job and broke what the structure. Now it has failed this demand zone. Now why does flip zone form? Now let me explain why flip zone form. Flip zone form because on that demand zone right here, there are buyers waiting for price to come there for them to do what? To buy from. But what happened? Once price came there, it reacted to the little orders they had there, reacted a little bit to it. Now, sellers now are heavily on this side of the market. This side that caused the change of character, sellers are heavily there. So instead of market to form a new high, what happened? It failed to form a new high, rather it broke down. So once I see this, I'll be like, okay, this flip zone is very strong. So I'll be very willing to trade from that place, from the flip zone. I'll be willing to trade from the flip zone. So now I'll look for my zone, wait for price to come there, set my limits if it's a limit order. But mostly on the 1 minute, you don't have to set limit order. You just have to wait. Price might come into it because sometimes you might not get triggered due to what spread. So mostly you just be watching it since it's 1 minute, price moves very fast. So wait for price to come in to the flip zone. That price is in the flip zone, then I target what the week 4 hour low. Target the week 4 hour low. Most times I would love to target the week 15 minutes, then wait for a retracement again down to the zone and keep trading like that. But if you want to leave it to just target the week 4 hour, it's fine. If you want to be trading the 15 minutes till it gets to the week 4 hour, it's also fine. So me, most times I take my profits from the 15 minutes because at least my from the 15 minutes at least I get like 5 hours, 6 hours, 7 hours like that, and it's enough for me. Like it's enough for everybody. So that's how the 1 minute entry. So let's hop right into this chart. Let's see how this trade went. So this is what happened right here, right? Now look at this. This market was very, very bullish, right? Now there was a little retracement, market came, broke. Now this is a chalk. It came back. Now I said on the 4 hour, I would love to see like market came, there was this retracement right here, as you can see, and it's 90 pip retracement. So as I said, on the 4 hour, I would love to see what a 50 pip retracement for me to confirm to be a retracement. So after this retracement and it broke that structure, I'll be like, okay, now I want to trade from the premium right here because this was a 90 pip retracement. So I will confirm this retracement. So I want to trade from the premium right here. So what happened? I'll go down when price came there, went down to the 50 minute, right? Sorry. Now on the 50 minutes, watch what happened. It's more clearer on the 50 minute. Price retraced, then dropped down, breaking the structure. So now I would have used this whole zone right here, but it would have been a whole lot. It would have been a whole lot. So I used the week. Why did I use the week? Now, if you go down, if you drop down to like the 5 minutes, let's see how the zone is on the 5 minutes. See, it's still that big. Then I'm going to see if I'll see it. See, let's just when there's these large wicks in the market, price bought then sell off. So it's very easier to use the wick rather than use the whole candle because it will just make things messy. So I wait, price came down to the wick. Now when price was in the wick, I dropped down to the 1 minute where I'm looking to get my entry from. As you can see, it's already in profit, massive profit. I think this is running for like 10 hours already. So now what this? Now look at what happened right here. You see, the price was already in this market, was already in the zone right here. So it retraced a little bit. As I said, on the 1 minute, I'm willing to see even if it's just an inside bar week for me to trade. So price retraced, came back up and broke what? That structure right there. It broke the structure. So normally I'll be looking to trade from here. Okay, I'll trade from here. But since there was no clear zone for me to trade from, I said okay, I'll just wait for it to give me a clearer zone for me to trade from. So price went back up and broke the structure right here. So as you can see here is a very clear zone to trade from. Now as price wicked the zone, clearly it wicked it, but we were safe. Why? Because I have a 5 pip stop loss rule on Euro JPY. I love to use 5 pip stop loss on Euro JPY because this happens a lot. This week, this liquidity grab on the 5 minutes happens a lot. So the 5 pip stop loss rule saves me a lot of time. So now what happened? Price retraced, it triggered in, came, broke structure. You could have still entered from here again, entered from here, came, broke structure. You would have still entered from here again. So there are many places to enter from. Let me draw the zone. Any place to enter from. Here and here. You would have entered from one, two, three, four. There were four opportunities to enter from. So you see, the market is very, very fractal in every way possible. So you don't need to know when price will do this or price will do that. All you have to do is just mark out your zone, wait for it to come, sit patiently on your hands, wait for it to come. If it's there, you look for your entry model, you trade. As you can see, that's my entry model. You see that, wait for a flip zone or what, a change of character, a little change of character. And I've said, you don't need to wait for a long retracement then market to break it. No, once you are, if you are trading from the 1 minute and you have your confluence from the 4 hour to the 15 minutes, on the 1 minute everything should be very easy for you to do. You don't need to be like, you don't need to start going to you don't need to start waiting for a retracement of 10 people or what. Even in 1 pip retracement, as long as it's in the 1 minute and all the buyers are the same, the only time you need to wait for more confirmation is when you are tracing a retracement. But once you are trading with what, the pro trend, the swing trend, then you know market, once it's in that zone, it will like to move fast because it's a pro trend. So you have to be fast too. Once you see a little retracement, a break above the retracement and a break below, chalk is confirmed, you trade from it. That's one thing that is very important. As you can see here, you can also, I would have thought, yeah, I traded this retracement, right? I think so. I thought I traded this retracement, but I don't know, I can't remember. But I think I traded it. So as you can see, I'll be looking again to enter from here. Price come here, I'll be looking to trade from here too. It's a very, very good zone and it's a flip zone too. So see, wick is too big, so you use the wick. Price tapped, formed, gave respected his demand, then broke down again. So you see, I'll be looking to trade from here and potentially sell it off. So thank you guys. That's my entry model on the 1 minute. Sorry, the entry model here, it wasn't a flip zone, but you've seen what a flip zone is and I've explained it. It's when markets respect like, how will I put it? Well, let's take for instance, we're in an uptrend, then market respect supply zone, then broke to the upside. So you see the reaction from that supply zone, the zone that caused the break to the upside after the reaction will be your flip, and it is very, very usable and it is very, very strong. So I hope this helps you with your trading journey. I hope this helps you with your entry, so that we all move to the higher level which we are aiming for. So thank you guys. Please like and subscribe. Peace out.